And Warren Buffett doesn't speak out often. But when he does, you pay attention, especially when he warns that America could be heading towards something far bigger than a market downturn. In a rare interview, Buffett dropped a serious warning about the growing use of tariffs and how they could trigger a full-blown economic war. Today we're breaking down exactly what Buffett said, why it matters, and how it could impact every single American over the next decade. No spin, no theories, just the straight facts from Buffett himself. Let's dive in. When Warren Buffett calls tariffs an act of war, to some degree, you know it's not just political theater. It's serious. In his latest interview, Buffett made it clear tariffs aren't just some behind-the-scenes economic tool. They're a direct attack on goods, and the costs don't just vanish. As Buffett bluntly put it, the tooth fairy doesn't pay them. Instead, those costs land squarely on businesses, and eventually on the everyday consumer. Buffett didn't mince words about inflation either. Prices aren't going to magically come back down. In fact, according to Buffett, they'll likely be higher 10 years from now, 20 years from now, and even 30 years from now. When asked about the political response coming out of Washington, Buffett stayed cool but firm, hinting that the real danger isn't new technology or innovation, it's political decision-making that can quietly spiral into major economic consequences. And right now, tariffs are quickly becoming the hottest topic in that conversation. Internet searches for the word tariffs have spiked dramatically. Yet most people still don't fully grasp what they actually are or how dangerous they can be. At their core, tariffs are just taxes on imports. But when you zoom in, the impact hits harder, especially in industries like auto manufacturing, where competition is brutal and profit margins are razor thin, usually just 3 to 5%. Buy the goat from the gang. Let's break it down the way Buffett would appreciate, simple and real. Imagine it costs $30,000, 0 cents, to build a car in the United States. But in Mexico, that same car only costs $25, 0 cents to produce. Naturally, a US automaker might set up a factory in Mexico to save money, then ship those cars back to the US to sell without tariffs. This keeps costs low, making them more competitive. Now, throw in a 25% tariff. That $25,000 0 cents car suddenly gets slapped with an extra $6.25 tax at the border, bumping the cost up to $31.25. Suddenly, it's more expensive to build abroad than at home. Exactly what tariffs are designed to do: protect US manufacturing by making foreign goods less attractive. Sounds good, right? Well, here's the catch. Those higher costs don't stay with the automakers. They get passed down to consumers. Everyday buyers end up paying more at the dealership and across the economy. When tariffs pile up across industries, prices rise across the board. That's inflation. And that's just the beginning. Tariffs aren't just about car prices or inflation. They're also tied directly to something even more dangerous: America's massive and growing trade deficit. Right now, the United States imports far more than it exports. In 2024 alone, the U.S. trade deficit hit an eye-watering $918 billion, 0 cents. To put that in perspective, back in 1995, the deficit was just around $100 billion, 0 cents. Warren Buffett has been sounding the alarm on this for decades. As far back as 2003, he warned that letting the trade deficit balloon could have serious consequences, not just with China, but with any trading partner. Here's why it matters. When America buys more goods from other countries than it sells, it hands over money, claim checks as Buffett calls them, to foreign nations. Those nations can then use those dollars to buy US assets, government bonds, buildings, businesses, real pieces of America's future wealth. Buffett painted a clear picture. If we keep importing and importing without balancing it out, it's like giving away ownership of the country, bit by bit, just so we can consume more today. And if this imbalance keeps growing, it doesn't just weaken the economy, it gives other countries more and more control over America's financial future. This isn't just economic theory. America's growing trade deficit has had brutal, real-world consequences, especially for American workers. When companies move production overseas to chase lower costs, factories in the US shut down. Imagine a US car company with 10 plants across the country. If it decides to shift half its manufacturing abroad, 5 American plants close and thousands of workers lose their jobs. This isn't hypothetical. It's exactly what's happened over the past few decades. In 1979, nearly 20 million Americans worked in manufacturing. Today, that number has dropped to around 12 million, despite the US population growing significantly during that time. Back in the 1100, 950 S and 60s, about 30% of American jobs were in manufacturing. Now, it's slipped into the single digits. And no city tells this story better than Detroit. In 1950, Detroit was booming, the 5th largest city in America, with 1.85 million people, and a thriving auto industry that controlled over 85% of the US car market. At its peak, Detroit had more millionaires than New York or Chicago. But as foreign competitors gained ground and US automakers lost their edge, Detroit fell apart. Today, its population has shrunk to just around 600,000, a ghost of its former self. Empty factories, crumbling neighborhoods, and lost dreams are all that's left of what was once one of America's greatest cities. But Buffett's warning about the trade deficit isn't academic. It's a reality many cities already live through. And if we're not careful, history could repeat itself. Here's where it gets even scarier. When America runs huge trade deficits year after year, it's not just lost jobs, it's lost ownership. Warren Buffett explained it with a simple but chilling example. Picture this. There's a small country called Investor Land, famous for making luxury watches. Over 1 year, Americans buy $5 billion 0 cents worth of watches from Investor Land. But Investor Land doesn't buy anything from the US in return. Now Investor Land is sitting on $5 billion 0 cents in US dollars. Money it can't spend back home because it uses a different currency. So, what did they do with those dollars? They invested, buying American stocks, bonds, real estate, and businesses. Those investments act like claim checks on the future wealth of the United States. Investor Land will collect interest, dividends, profits, real returns from American companies and properties. And every year the US keeps buying more from Investor Land without selling anything back, that foreign ownership grows. Over time, this dynamic means more and more of America's economic future belongs to outsiders. It's slow, it's invisible, but it's real. That's why so many politicians are now pushing for tariffs. They want to stop bleeding US dollars out of the country and handing over pieces of America in return. But, and Buffett is quick to point this out, there's no such thing as a free lunch. Tariffs may protect domestic industries, but they also mean higher prices for consumers and more uncertainty for businesses, making it harder to plan, expand, and hire. In short, it's a messy, dangerous balancing act. Warren Buffett has a simple philosophy: never bet against America. But even the most optimistic investor knows you can't ignore the warning signs. Tariffs are rising. Inflation isn't going away. The trade deficit keeps ballooning. And slowly but surely, foreign countries are buying up more and more pieces of America's future. Buffett isn't shouting from the rooftops or preaching panic. He's calmly pointing out the reality. Economic war doesn't start with tanks and missiles. It starts with money. Right now, America is at a crossroads. If the trade deficit keeps growing unchecked, and if tariffs backfire and drive up inflation, the US could face long-term consequences far beyond what most people realize. Still, Buffett remains bullish on American companies. Despite the risks, he's still investing here, still believing in the long-term strength of the US economy. But make no mistake, the road ahead will be rocky. And anyone ignoring the warnings is setting themselves up for a rough ride. If you found this breakdown valuable, stay tuned. There's a lot more to come. Make sure to check out the other videos on the channel where we dive deep into the financial realities shaping our future. And remember, Warren Buffett's advice isn't just for billionaires. It's for anyone who wants to protect their future and understand where the world is heading. Stay sharp, stay informed, and I'll see you the next one. Thanks for watching.